a lot of lenders are now pushing for spouses to be the co-signer on the mortgage.
Absolutely. So with the insurers, they've pushed quite hard, and with these new rule changes, it's been something that sort of has been mentioned a little bit more to us, to try add the spouse wherever we can.
Now, I grew up in an era where if I was to buy a house, if I was married, both myself and my wife would be on title, and we would also be the co-signers on the mortgage. But that's not always the case.
Different cultures have got different viewpoints on that. Lately, what we've seen, because of all the new stress tests and qualification rules and people being able to buy so much less, we've had a few new products come out from different lenders where we can include child tax benefits. So if you've got 2 or 3 children and you get paid to have them.
That's right, because it is income coming in. So it does help the qualifying process.
Absolutely, and I've had some cases up to extra $50,000 in buying power.
And how many kids did they have? Wow.
That's working on 2 or 3, and depending on the ages, and
sure.
Again, some,
But it all contributes toward that approval qualification.
100%. So we again look at the client to see where they fit, what's their story, where the income coming from, how much down payment they've got. Sometimes adding the spouse makes a huge difference, because one of the other factors that have now come into play with a couple of our lenders is if your ratios are very low, and when I say ratios, we work with the GDS, TDS ratio when qualifying you for your mortgage. If you've got really low ratios, lenders like that. You're a lower risk, and therefore there are additional rate promos for those type of buyers at specific lenders, not everyone.
Right. It's not everyone, and that's the advantage, again, of going to see a mortgage specialist.
Absolutely.
There's been much made in the media of late that, don't bother getting a mortgage, go and rent.
Well, kind of it comes down to, what's your reason? Do you want to move in a year? Are you planning to travel? Is it somewhere you're going to stay for the next 5-10 years? I mean, if you're someone that wants to stay in that particular place or that particular area and you can see yourself there for 5 years, 5 to 7 years to be exact, it normally pays you to buy. We've got a really good rent first buy report that we can put together for specific clients. Yeah, that's so if a client wants to rent, we can say, okay, cool, give me the information, how much you want to pay for that particular unit. We can reach out to a realtor and say, well, what do those units go for? And we can then factor in where's the break point. Because when you're paying $1,000 for your rent, in 5 years, you've got nothing to show for it.
That's right, it just all goes
to someone else's mortgage.
To someone else, that's right. Yeah, exactly.
Whereas if you've got your own mortgage, a portion of that, normally 50% more or less, I mean it changes, but 50% of that's interest, 50% of that is actually going to paying down your capital. So
that's right, you get some equity in a home if you've got a mortgage. But like you said, it's that 5 to 7 years, so someone who is planning to own a particular property for 5 to 7 years, it makes sense to buy to get that mortgage. But for someone who is really not sure where they want to be or whether they want to buy, renting might make sense.
Absolutely, because we get better rates with well, not better rates, but lenders, we got terms. So most people go for like a 5-year term. So if you're buying to move in a year, then we can put you in a 1-year term. But you're someone that's not really wanting to put roots down, as to say. So maybe renting's a better option, but that said, we're in a really low market, so everyone expects the market to increase at some point, and
traditionally, a housing market has increased over time.
Absolutely,
property has always been the best way of investing.
It's stable and it's there. It's something you can tangibly live in.
Right. What about a home that someone buys and it needs some renovation, it needs some work? Can you roll in a home improvement loan into the mortgage? Is there some kind of a warranty program that you can bring in, if someone is worried about, the fridge dying or the stove or something like that?
Absolutely, and we see more and more of that where people maybe like an existing neighborhood but wants new kitchens or new bathroom and got an idea of what they want, you go for a purchase plus program with a lender, where the deal goes through, and then you've got a certain amount of time to do the renovations that you want to do, and then that's added into the mortgage, and you've got a home that's a lot closer to what you desired.
Sure.
And to top that off, we've got lenders that offer new home warranty program. Well, it's not a new home, but a home warranty program for 12 months, and it's covered. We throw that in. So if anything dies, your furnace, anything that goes in the house, it's covered. So you have that peace of mind that you're moving into a home, and maybe finance is a little tight for the first few months.
Sure.
And at
you
least
don't have much wiggle room, but now you've got a home warranty program.
Absolutely.
That's a really good program. Is that available from all lenders, or is that available just through a mortgage specialist?
It's
what do
available.
the banks offer?
That's correct. The banks don't offer it. It's through a number of a handful of mono lenders that we deal with that aren't available any other way but going through a mortgage specialist.
One more reason to do so.
Absolutely. All those little pennies add up.
All right. Let's talk about mortgages for the self-employed. Traditionally, it's been a group that's had some difficulty getting mortgages.
That's correct. The income is never sort of very stable. It's sort of up and down,
yes.
As well as, you don't want to pay the tax man as much as you have to, so there's a lot more expense that is written off. And so their income documents don't look as good as someone that's employed.
Right.
So it's different. So there are some premiums that a lot of lenders attach, a lot of the big banks attach too. So when you're going in, you get a rate and you think it's great, but actually it's not, unless you've phoned to find out if it is or isn't.
Sure. So again, you should always be looking for at least a second opinion, whether it's from a bank or another mortgage specialist. Absolutely, to make sure you got the best rate, because there are lenders out there that also have what we call stated programs, and that's where you're a business for self, and your tax return says one thing, but your bank statements say a very different thing, and we can use the very different. All right. Deane, is there anything else that you would care to add about mortgages at this time? It's a very fluid market.
It is a fluid market. I would say it's relatively stable now. I think a lot of the lenders out there, we've got some really good competitive rates now. Your insured 3.24 is a standard. We can get a little lower than that. Then you've got your uninsured, which is probably around that 3.59, 3.6 mark. That's when there's no insurance included. If I start getting into the rates, unfortunately, it is
here all day.
yeah, all day. But we are looking for a bit more of a stable rate environment at the moment as spring sets in. But so
the lenders typically give you a better rate spring, summer than they do right around Christmas, start of the new year.
That is correct. They want, just like everyone, they want to get the market up and running. So they start to bring in promos. So we've got like 60 or 45-day quick close programs. So we have a lot of that from different lenders at different times. So every week our rate promos look different depending on which lender's trying to get a little bit more business that week. But going forward, I would say, we are looking at rates increasing, and we are looking at a higher interest rate environment, just based on the stress tests and everything else that have been put into play to protect clients against themselves.
When a person does get mortgage rate approval that they are comfortable with, how long can they hold that rate?
So if we do a pre-approval with one of our lenders, we can hold it up to 4 months.
All right. Deane, thank you very much.
Wayne, thanks for having me.
Deane Thomas from Advanced Mortgage and Lending Solutions.